What's up, guys? It's Mr. Fit to Flourish, and today I wanted to talk about managing risk when it comes to trading. So, as you know, I trade options. I'm an options trader. Now, the one thing that you need to understand when it comes to trading and managing your risk, the number one thing is understanding what is your goal. What is your goal? So, as long as you know your goal, you can hit a target. So, you can't hit a target that you can't see. So, if you don't have a target, you can't hit it, right? So you see these people in the Olympics shooting the arrows. They have a target that they could see. If they were blindfolded, they would not know what their target is or where it is and how to hit it. So if you don't have a goal, that's going to be the first thing. You're going to be trading all over the place, just trying to make ridiculous gains, GameStop gains every single day with no target in mind. So you need to set a goal. For example, what I did is I set a goal of just $500 a day. Say, hey, if I could hit $500 a day, then I know that I need to put X amount of size on in order to make that much. Okay? So I wanted to share my screen and kind of show you visually how to manage your risk, especially if you're trading options. Okay? And a lot of people think in terms of just buying, so we're just going to do calls for today since people don't know how to do puts for some reason. I don't know. People don't know how to go short. So we'll do longs today. Okay, we will do longs today. So in terms of getting into trades, if you don't know how to get into a trade, you need to watch my how to enter a trade video. Basically, to shorten the whole lesson, you get in after the bar close of a trend bar, a good trend bar. So this is a nice big green bar. So it's a trend bar. You would get in one tick after. So this would be your entry. So one tick after the bar closes. Well, where do you typically set a stop? Well, if you don't know that, watch my video on how to set stops. So your stop would typically be one tick below. Okay? Now, this is how you manage risk. Once we get a bar closed below this level, and this is your stop loss, then you just get out of the trade. Okay? You do not wait and see, maybe it can go the other direction, maybe it could keep going. No. You get out of the trade immediately. Okay? The rule is that good trades just go. So in this case, if we get in here, the trade just goes. We just make money. Okay? The play just goes. So we never hit our stop. But what happens if you do hit your stop? And this is the big thing. A lot of people just put money into trades like, I'm going to put $10,000 into this trade because I want to make $1 bajillion. Well, are you willing to stomach a $10,000 loss? This is what you need to be asking yourself. This is real risk management. Real risk management is however much I put in on this trade here, I need to know how much I can potentially lose if this trade does end up going in the downward direction and hitting my stop. So for instance, let's say I put in $10,000 and each contract was $50, okay? So I bought contracts for $50. I bought $10,000 worth. And I know that if this goes in the other direction and it hits this stop loss, that this $50 contract can go to $25. Well, what does that tell me? Well, that tells me that my $10,000 just got split in half. So now I only have 5K. So that means I just took a $5,000 loss. Now, are you okay with that? I know most people wouldn't be. Okay? Depending on your account size, most people cannot stomach that loss. So if you can't stomach that loss, don't put on that size in the first place. This is the main thing that I'm telling people all the time. They're like, oh man, I just took a big loss. Well, why did you take the trade? Every trade is not going to go in your direction. Don't trade if you think every trade is going in your direction. You don't need to be trading. Okay, and don't come complaining to me when you're trying to copy my trades and you don't know how much you're risking. You're ridiculous. Don't even talk to me. But let's say you know that potentially a contract can go from 50 to 25. That means the potential loss here is 50%. Okay, but the potential upside is 150, which is good. However, you always need to keep in mind the risk management portion of this trade. If you're not willing to stomach a $5,000 loss, you need to decrease how much you're putting in on the trade, period. Okay? So let's say that you're willing to take a $300 loss. So in essence, we know that this contract can potentially go from $50 to $25. So what is 2 times 300? 600. So let's say we just put in $600 into this trade, and it does end up going in the opposite direction, and you end up losing 300. Well, all right, fine. I'm out of the trade. I took a $300 loss. That's okay. It doesn't affect my account at all. And that's really the basics of risk management when it comes to retail trading. Most people are losing because they don't know how much they can lose, and they don't know how to size into a trade based on the fact that they really need to be thinking about what is the potential highest amount that I can lose on this trade. If you reverse engineer this and go, okay, well, I could potentially lose this much, think about how much you can lose first, okay? And then think about, okay, this is the potential gain. Because obviously you're in trading to gain, obviously, but you never think about how much you can lose. But you keep losing. So if you keep losing, think about how much are you losing per trade? Why are you not profitable? Well, your losses are probably bigger than your gains. Why? Because your port size is probably too big. Okay, how much you put into a trade is probably way too big. So you're probably that person who was putting $5,000 into one trade, and you're not even paying attention to the chart. You're just looking. You're like, oh, it's going up. Okay, let me put a lot of money. I want to make money, and you put in a lot of money into a trade, and you don't think about, okay, what if it goes in the other direction? Some people don't even set a stop loss. That's the first problem. But let's say you do have this stop loss. Do you understand that you're getting contracts that are $50? And this contract can go from 50 to 25. It can be cut in half if it goes in the other direction. Now, that means that your money can be cut in half. Do you understand that when you're entering the trade? Do you understand that you can potentially go from 5,000 to 2,500? Do you understand this? Okay. If you don't understand this, this is the first problem in your trading. This is real risk management. Okay. Real risk management right there. And another reason why we want to decrease our port size anyways is because if you're thinking only about the money, you're not, like I said, you're not paying attention to the chart. You're not seeing that, oh, okay, we just put in this triple bottom. We have huge bottom side wicks. Nice bull bar. The 9 is crossing the 20. We're getting this nice upside move. We're getting a gap fill, breaking above the close of previous. You're not looking at any of that. You're just like, oh, it's going up. Money. I need to put money in. Okay. You need to be managing the trade by looking at the chart. Decreasing how much you put in also allows you to let the trade run longer because you don't really care about the money that much. It makes you a better quality trader. So essentially, risk management is reducing the amount that you're putting in because it'll reduce not only your loss, but it'll reduce your susceptibility for compounding losses. Okay, I know everybody always talks about this stupid. This is the dumbest thing ever. The R multiple. Oh, the R multiple. Nobody uses a R multiple for real in real life. Like, yes, you want to understand that. Okay, you want your reward to be 2 times bigger than your risk. Yeah, for sure. Who cares? Who cares? Because with retail traders, no retail trader is going to stop and pull out an R multiple and be like, oh, this is. But you can look at the chart and see, like, okay, we could potentially go down this much. We could potentially go up this much. You could look at the chart, but does it ever really play out like that all the time? No. So really what you need to be doing is looking for a quality setup. You get in after a nice trend bar, a good signal bar. But before you get in, you need to look in the opposite direction and say if the trade goes in the other direction. And if I choose this instrument called an option, you need to know how far down can this contract go. How much can it lose? So that's the real question. How much can this contract lose if the stock starts to go down this much? Is it 20%, 30%? However much percent it could probably lose, you need to understand that's how much you can potentially lose on the trade. And are you willing to stomach that loss? Are you going to accept the risk of the trade? If not, you need to let the trade go. Okay, you don't have to trade every day in order to make money. You only need quality trades. Okay. And then you need to keep your wins bigger than your losses. How do you do that? You need to understand how much you could potentially lose per trade and keep those losses extremely small. Okay, I'm not saying to reduce or keep tight stops. You can have wide stops, but you need to understand how much money are you going to be losing keeping those wide stops versus your potential upside. Okay, so like I said, keep a goal in mind. Look for only quality trades. Please focus on the trade. Do not focus on the money. The money just comes. Once you start to focus on quality trades, the money is just going to come. Okay, trading at first it's not about the money. It's about being the best by finding quality setups and being consistent and reducing your susceptibility for loss and error. After that, the money just comes. But you gotta keep that in the back of your mind. If you just want money, if you just want to gamble, go to Vegas. If you just want money, get a second job. I say this all the time. If you want to gamble, go to Vegas. If you just want money, get a second or a third job. Okay, that's not trading. If you want to be a trader, you're gonna have to be a professional. You can't. There's no one who's just trading who's not a professional trader. Okay, and if they are just trading and they're not a professional trader, probably losing head over heels. Okay, because I was there losing head over heels. If you want to be a trader, you need to be a professional. What does that take? Well, professional athletes, what do? They practice every single day. Professional traders, they look at the charts every single day. They understand supply and demand, economics, and most importantly, risk management. So hopefully this video helps someone out there. Be careful when you're trading, know your goals, and decrease your port size. And I promise you'll transform your trading. Just decrease your port size. That's literally the only problem with retail traders. Port size is way too big. You lose, you're cooked. Anyways, Mr. Fit to Flourish. Y'all have a good one. See you on the next one. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance,